Hi everyone, Alex Saldana here, and I'm ready to give you your July update for the Denver metro market. And we're going to talk about, are we continuing in this crash mode interest rate craziness, or do the numbers not support it? Let's take a peek. Okay, so what we're looking at here is the stats from the entire MLS in the Denver metro area. And this is over the course of 3 years, but we'll zoom in and out for different time frames to see, are we within the normal ranges or are we seeing anything abnormal yet? And we're going to start with closed price. The median closed price in April was 600,000, was 590 in May, was 585 in June. So a little bit of a downtick, but I think we're just out of like crazy multiple offers, $50,000 to $100,000 over stuff, which thank goodness. The amount of new listings to hit the market in May was 10,300, in June was 11,600. And we can see historically over the past few years, June is typically one of the highest months. 2021, we had 11,300. Back in 2020, we had 10,600. Back in 2019, we had 11,000. So very much within normal range still. The amount of active listings on the market is 10,200 for the month of June, where May it was 7,300. So the headlines are going to read inventory is up by 30%. Well, this is over the course of 3 years, and it's a very clear chart on what happens every single summer. So if we go back the maximum amount of time, we can just see we're in the same trend. June, July, August typically have the highest months of inventory. So I don't know whoever told you that the best months to sell your house was the summer months, but they're wrong. Don't believe them. January, February, March tend to be the best months to sell your house. All right, number of pending listings. Number of pending listings is down. May was 8,600, June 7,400. So down a little bit, but nothing too crazy. We still just don't have enough inventory on the market to make a clear distinction on if things are normal with these sorts of adjustments or not. Number of closed listings, May was 8,400, June down to 8,000. So a little bit lower, which typically in June, let's go take a look, is one of the highest months. So back in 2021, we had 9,600 close. Back in 2020, we had 8,900 closed. Back in 2019, 8,000 closed. So still within the ranges, but generally the closings pick up and peak in July usually as we go back. So just a little bit of an interesting downtick, but with interest rates doubling over the last few months, it created a pretty intense knee-jerk reaction for buyers, and I don't blame them. Days in the MLS, I think this number is skewed. It's saying 5 days on average in the MLS. I just think that's wrong. I don't think that's the case. I think it's more like 14 or 15. So take it what you will. There's just this number just doesn't add up to me personally. Month supply is at 1.4, up from 1 month of supply back in May. An average balanced market is typically 5 months of inventory. So we're still historically low, but we've got 40% more supply of inventory than we did a month ago. That's what the headlines are going to read. But let's go back a maximum amount on this chart, and we can see 1.4 months is still crazy low. So if you were shopping in 2018 in January, which was an intense market, same thing with 2017, we still got less inventory than those couple of periods. So once again, within the normal range of what our market does, but still on the intense seller advantage side. Percentage of closed dollar to list dollar. So this means if you list it for 100,000, does it sell for 105 or does it sell for 95,000? And you can see here we're at 101.3%. So if you listed at 100,000 on average, you would sell for $101,300. Price per square foot dropped down by $2 over the last month. No big deal. Dollar volume to sell down a little bit over the previous month. Shows to pending. So this number is definitely took a digger. From May at 9 showings to June at 7 showings to get to a pending contract. So it just, these interest rates kicked a lot of people out of the market, but the people that are out there are buying. You don't have a ton of tire kickers right now. And then shows per listing 6.5, similar to shows to pending. So there you have it. There is the wrap up of the numbers in the Denver metro area for the month of June. Now, what is this telling us, right? Everything is still very cyclical. Get rid of the last 2 years of our lives. 2020, 2021, there was nothing normal about it. So just axe it out. And what are we left with? We're left with increasing inventory in the summertime. Completely normal. We always double our inventory in the summer months. And in fact, whoever said that the summer months were the best time to sell your property was wrong. You should not listen to them. January through about April are the best months to sell your house because there's the least amount of inventory on the market. So we're in a normal trend still. Now, interest rates have doubled over the last few months. That's a real concern. But how big of a concern is it? Are we going to go to 10% interest rates? I don't know. And anybody who says they know is absolutely wrong because the Fed doesn't know what they're doing in the next meeting. We have a Fed meeting coming up next week that'll have more CPI data, and we'll see if inflation is still running hot. And if it is, they're going to increase interest rates. Now, we still don't have a lot of houses on the market, and builders are pulling back. So if we end up going into a recession, and which has not happened yet, folks, it has not happened, and if it is, it's probably going to be extremely mild. What's going to happen in 2 years when we rebound out of things? If we have even less inventory on the market than we do now. So what do? If you're planning on staying in your house for 5 to 10 years, you're totally safe to buy. Will the market maybe adjust by 10 to 15%? Maybe. But also, what if interest rates keep going up for a while? You can't time it. If interest rates go down, then fine, refinance and get a lower interest rate. No big deal. So if this is a primary home, I think you're okay to buy. If you're looking at selling, we still have record low inventory numbers. So it is still very much a seller's market. Are you going to get 50 grand over asking price? Probably not. But is it going to take a few weeks to sell your house? Yeah. And I think part of what we're seeing in these price adjustments, which is all the headlines are saying is price decreases and more inventory and blah, the world is ending. But we had houses selling at 10, 15, even 20% over asking price. That is insanity. So what happens when all of a sudden the interest rates go up? All of a sudden those buyers go, whoa, 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 let's hang out for a second. So houses that were listed at 500 that sold at 550, now we're seeing new houses come back on the market for 500, 505, 510. So if you get rid of the one or two in a neighborhood that sold at crazy prices, we're still on back to a normal trend. But what it looks like on paper is that we've already adjusted by 10% down. So once again, I'm here, folks. You got questions, I'm real. Send me a message, text me, DM me, comment, doesn't matter, like, subscribe. And until next time, happy housing.